Bloomberg Audio Studios.
Podcasts, radio, news.
I was really clear during the election that everything that we put forward, whether that is on the NHS or on defence or on tax policy, will always be fully costed and fully funded. That's very different to what we've had these last 14 years with decisions with no regard to where the money's going to come from. And I'm going to be different.
Rachel Reeves there, speaking to Bloomberg in her first interview as Chancellor. She has promised to be different. Now's the time to deliver. Hello, you're listening to Bloomberg UK Politics. I'm Caroline Hepker.
And I'm Lizzy Burden. Welcome to the programme. We're in countdown mode to the first Labour budget in 14 years. The first as well from a female Chancellor. Rachel Reeves dropped her official promotional Instagram reel for the event on Wednesday, something that's become sort of a Chancellor tradition leading up to a fiscal announcement. It means things are getting serious, Caroline, but many already touting this as historic, and there have been, of course, weeks of leaks. We thought it would be helpful today to synthesise them all for you in one bite-sized show to get you ready for Wednesday.
Yeah, absolutely. It's been a total whirlwind. Many of our guests say that the speculation has been far greater now than it has been in previous budgets. Bloomberg's had a number of big scoops. Rachel Reeves expected to hike taxes on entrepreneurs selling their businesses. The letters from ministers to the Prime Minister worried about departmental budget cuts. And then CGT, capital gains tax, would it go up to 39%? Wide of the mark was what the Prime Minister told Bloomberg. So, Rachel Reeves has a lot on her plate, but as the final costings are calculated by the Office for Budget Responsibility and the red briefcase is being polished, I'm not actually sure if it is physically polished, but anyway, we will look at the potential scenarios for the 2024 autumn budget.
Well, who better to do that with, Caroline, than our chief UK economist, Dan Hanson, who actually previously spent 7 years inside the Treasury working on a variety of UK macroeconomic issues. Dan, welcome to the podcast.
Thanks for having me.
I know that you have many nuances and important pinpoints to make on the spending, debt and borrowing, but I want to cut to the chase. Let's do a quick fire round when it comes to taxes, because that's really what we all want to know. Which taxes are going to go up? Are we going to see, for example, an extension of the freeze on income tax thresholds?
I think so, yeah. I think that's very likely.
Inheritance tax?
I think there'll be some scrapping of some of the reliefs, the agricultural and business reliefs probably go.
What about national insurance, not for employees but employers?
That looks very likely because it raises quite a bit of money. So, and it's a tax on wages, remember, ultimately as well.
VAT on private school fees then?
I think so, yep.
It's going to be imposed. Non-DOMs who don't pay UK taxes on their overseas earnings, tweaks there?
Definitely.
And lastly, taxes on entrepreneurs when they sell their businesses.
That's what the Bloomberg scoop said, wasn't it?
Yeah, exactly.
It's gospel. Well, look, when you compare all of those, Dan, what is actually significant? Because if they're not going to raise the main levers of tax, are these just drops in the ocean?
No, they're not. I mean, we've put a note out this morning that says if you do, it's a lot of small things you have to do, and the most significant of which is the one you mentioned about making employer pension contributions subject to employer NICs. So it's a bit of a mouthful, but that can raise you, depending on what tweaks she makes to make allowances for public sector workers, that can raise you somewhere between sort of 12 to 17 billion pounds. So if you're talking about, let's say, a 40 billion pound black hole, that gets you a long way there. And the freezing of the thresholds as well, that gets you 7 to 8 billion. So you're over halfway there, if you like, with those two measures. Obviously, there are a lot of questions about whether that contradicts what was said in the manifesto.
Yeah, so on employer NICs, to what extent is that passed on to employees and therefore is a manifesto breach?
So, the economic evidence and the academic evidence is that it does get passed through to wages. So the answer is it is a breach. I mean, I was looking at the manifesto last night, and
as you do before bed, Dan.
As you do, yeah. And it wasn't quite before bed. I'm not saying it was. I was reading it to put myself to sleep, but it was one of the. I was reading it to just see what they said about it, and it does say it doesn't specify between employee and employer NICs. It just says national insurance contributions.
I think Rachel Reeves called Rishi Sunak or Jeremy Hunt out for picking the pockets of working people for doing the very same.
I don't know, when I read it, I thought that there was actually quite a bit of wiggle room in that manifesto.
We'll make a good politician, Carroll.
No, I would not. Right, let's... So in terms of the overall burden of taxation, that's obviously going up. Mm-hmm. But the issue is also around what that's going to, in terms of the plan for how the departmental budgets are then going to be filled. That's also the main question that she's going to have to answer for ministers and for the people who are going to be listening, actually, in Westminster.
And whether it feels like austerity.
Yeah, well, that's actually, when you break it down, that's why taxes are going up, because she wants to deal with that issue. We've known for some time that there are sort of two issues, aren't there? One is that in the medium term, there are a lot of departments that we're going to be under very, very tight, running very, very tight budgets on the plans that were set out in March. We've obviously had this black hole that was found over the summer. So it's those two things she's going to have to deal with, and that's why taxes are going to rise. Because in the background, she's going to say, "I want to balance taxes with day-to-day government spending." That's going to be her. I think she's actually said it's her golden rule, sort of taking from what Gordon Brown did back when he was Chancellor. So that is why taxes are going to rise. It's to balance those two things. So you're going to get a big increase in spending, but you're also going to get a big increase in taxation. To go to your point, Lizzy, the sort of ending austerity, the amount of money needed to do that, it's a lot of money. It's 30. That's why we're talking about a 30 to 40 billion pound black hole, is to sort of not have austerity in the plans for any government department. It requires a lift to spending by that amount.
In terms of investment, that's also the goal, isn't it? To change the narrative, because what the Labour Party inherited is the idea that in the longer run, the UK government would be investing less. She also wants to change that balance too. Will she be able to? Will she be able to if she's raising taxes?
Yeah, she will. So the way to think about that is that we've got one fiscal rule that looks at balancing day-to-day spending with taxes. That doesn't take into account investment spending, so that's that you can think about that separately. And the way it looks like she's going to get around that, and we might get we've sort of had some sort of scoops and news on this overnight, is to change the debt target that she focuses on. So she moves away from targeting what we call public sector net debt to something called public sector net financial liabilities. And it's a lot of accounting involved, but the bottom line is it frees up about £50 billion of money to pay for investment. So I think, just to go to your point, Caroline, one of the really important things here is if she's going to set out a budget that not only deals with the inheritance, but also goes for growth, the sort of forward-looking element of the budget, she's going to have to basically change the investment plans that she's inherited, put them on a trajectory where I think it's only reasonable to say they're flat as a share of investment is flat. Public investment is flat as a share of GDP. At the moment, it's falling quite considerably as a share of GDP. And that would cost something in the region of £25 billion to do that. So I think the investment bit is a sort of separate part of this. It's not really part of the tax conversation.
But we were speaking to Leslie MacLeod-Miller, who is the CEO of Foreign Investors for Britain, who was arguing, as I think he'd argued to Number 10, that if you change the non-dom rules and tax breaks, you will lose investment, and these people, these wealth creators, will go to other countries. So it seems like he's losing the political argument. Would you say he's lost the economic one too?
So there was an interesting shift under the Conservatives. Before the pandemic struck, if you cast your mind back, Rishi Sunak set out plans to lift public investment as a share of GDP to 3% of GDP. So there was this big shift in the Conservative Party to focus on public investment. The pandemic struck, a lot of things changed, but then Sunak himself changed to focus on private investment. So the Conservatives' argument would be, look, yeah, we've got public investment as a share of GDP falling, but we've taken measures to boost private investment, particularly business investment, in terms of the allowances they put in place. Labour obviously flipping back and are saying, look, the public sector needs to send a signal to the private sector. And that's why we need to boost public sector investment, because that will lead private sector investment and create the sort of the conditions where private sector follows. And we've heard a lot about crowding in, this idea about the government spends this money and it crowds in private investment. So I think one thing particularly to watch next Wednesday will be what the OBR says about that in terms of how much, there's going to be more investment spending from the government. What does the OBR say this does to private investments?
The other thing that we have to think about is is tone from Rachel Reeves and sentiment, because that does have an impact too on what is kind of taken away from this budget, and what investors actually think about it, and whether you can tread the line of increasing taxes but also trying to spend more in terms of investment and crowd money in, as you say, and change the fiscal rules. How is that going to be taken on board by investors, let's say, who might buy gilts, which are UK government debt, bonds, or sterling, or UK stocks?
So I think it's a really interesting one. So the point about sentiment, I think, is going to be key, because we've seen a lot of surveys deteriorate. We saw the PMI today. It's above 50, which means that it thinks the economy is expanding, but it's only just above 50. So there has been this sentiment hit, and it seems to me that if sentiment has deteriorated because people are worried about tax rises, those tax rises are almost certainly coming. So there is a bit of a concern, I think, about the near-term outlook, about whether this sort of hits momentum in the economy. If you're an investor, I think Reeves has done, at least in my view, everything she can do to tee up and use all the right structures to make sure that this sends the right message about growth. And if you're an investor, yes, you're going to worry more about issuance. If you're investing in gilts, you're going to worry more that the government is going to issue more debt. But the fact that money is going towards investment, which everyone agrees the UK needs, it's very hard to make the sort of, everyone goes to it, but the Liz Truss argument, which was very, very different. It was in the context of not using the OBR, the UK's fiscal watchdog. It was in the context of tax cuts rather than investment spending. And it was in the context of double-digit inflation. And inflation currently is 1.7%. So it's a very different environment as well. So I think so far, everything has sort of moved in the right direction for there not to be this sort of knee-jerk reaction on the day, and potentially announcing at the IMF today or in the next few days about what will happen with the fiscal rules. Doing that in the IMF at the IMF sends a very strong signal. It's very different to what happened at the end of 2022.
I was going to say, when Kwasi Kwarteng came back on that plane to find out that he'd been fired.
Exactly. So it's very different. So in the sort of, I don't want to say the home of sort of fiscal responsibility, but the IMF are very sort of make a lot of sounds about making sure, we saw with the WEO about fiscal responsibility. So making that announcement there, it sends a pretty strong signal.
The fact that Rachel Reeves looks like she's about to get away with tax hikes and moving the fiscal rules, changing the goalposts, and all of this without a huge market reaction, without it being a Liz Truss moment, seems an incredible feat politically.
Yeah, but we go back all the way to the manifesto. They were elected on a plan for change, for something different, for stability. That's what the British public, in a way, wanted. I mean, does this qualify as change? I suppose we have to wait to see if it delivers economic growth.
All right, Dan Hanson, our chief UK economist, great to have you with us in the preview for the budgets. On Wednesday, we'll have full coverage for you right here on Bloomberg. But that's it for us for today.
If you like the programme, don't forget to subscribe, give it 5 stars so that other people can find it on Apple Podcasts, Spotify or wherever you listen.
This episode was produced by Tiwa Adebayo and our audio engineer was Sean Guastamakia. I'm Lizzy Burden.
And I'm Caroline Hepker, and we'll be back with more on Monday. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.